can you help with this presentation? Yeah, it's not working. It's not working. It's not going as presentation mode.
You have to click it, right?
Yeah. Okay, that's good. So we have to pay taxes when whatever you buy, wherever there is income, you go to office, you go to get gas, you buy things, everywhere there's taxes. Even after death, there is taxes when you transfer your property to your kids and your beneficiaries. There's a story of taxes in US. Next thing, I wanted to just clarify about CPA versus EA versus AI. How many of you use CPA? How many of you use EA? How about AI? Pretty much everyone, right? That is TurboTax. So I'm from India, and the two from Hyderabad. So anything and everything we call baingan, which is brinjal. So that's why there's a comparison between CPA, EA, and AI. So AI is only helping you giving information. It's not helping you in saving taxes. CPA is somebody who does everything: accounting, bookkeeping, taxes, auditing, everything. So they are like an all-rounder, but they don't specialize in only one thing. But there are certain people who can specialize only in taxes. Like they will be focusing only on taxes, corporate taxes, individual taxes, business taxes, partnerships, all that. Whereas EA is only focusing on taxes, nothing else. CPA is licensed through the state. EA is licensed through the federal IRS. So they can represent any of the clients throughout the US. Whereas CPA has to be licensed in that state to represent you. AI, TurboTax, is only a reflection in the mirror. It's not going to help you in saving taxes. The refund that you get is based on your situation, based on what taxes you have already paid. TurboTax or any other AI software is not going to help you in saving taxes. That's what I wanted to clarify. The One Big Beautiful Bill Act, it has more than 950 pages, 100 plus provisions. The biggest impact is almost $4.5 trillion is going to be reduced in the next 10 years. They don't have that much revenue right now, and they're expecting $4.5 trillion of net revenue reduction is going to happen over a period of 10 years. So what's happening is they're cutting Medicare, they're cutting other expenses, they're laying off all the federal employees. Over a period of time, they're expecting that they will be able to get $4.5 trillion, 10 years. But then nobody is looking at the cuts that are going to happen for Medicare and other federal government, whatever policies they have. So let's talk about individual tax provisions. The first thing is the rates. Obviously, everybody is aware of the rates: 10%, 12%, 22%, 24%. Mostly 22% is up to 206,000, between 206 to 500,000. 22%, 24%, then 32%, 35 and 37 is beyond 500,000 and 750,000. Those are the rates. Standard deduction has gone up in the new bill, and it has definitely enhanced, the amount has been increased, the standard deduction amount. Earlier, before tax reform, the standard deduction was very small. And after the tax reform happened in 2018, the standard deduction has been a good number. And now in 2025, it was going to expire, because of which Trump came in and then they tried to extend it. So now it's permanent. It has been extended permanently, so standard deduction amount will be higher. So one thing that has happened in 2025 is a lot of individuals who are going to file taxes in next year, 2026, they're going to get refund. Do you know why? Sorry? Okay. Anyone else? That's right. That's right. So basically, this act came out in July, but all of you might have done your W-4 last year in November and December in 2024, or by January of 2025, right? So basically, you have already filled all the information to deduct taxes from your paycheck, but then the bill came out in 2025 July, and it's being applicable from some of the provisions are applicable from January itself. Some of them are applicable in 2026, but basically the benefit is going to happen to all the individuals irrespective of their tax rate. So you will be getting refund for sure, unless and until you have given wrong information or you didn't give any information at all, you will be probably paying taxes. Again, it all depends on specific information that you gave to your employer. The other thing that I wanted to bring up is the tax rates here are not the actual taxes that you pay. So you see here 22%, 25%, 12%, 22, whatever it is. These are marginal tax rates based on which your income is being taxed, right? But then whatever taxes you pay are going to be, if you divide that by your taxable income, that's the actual tax rate that you are paying to the government. These are only marginal rates on which your income is being taxed. But whatever taxes you pay divided by your AGI or taxable income, that's your actual tax rate. I just wanted to show that if you don't do planning, you end up paying more taxes than somebody who has planned, you pay less taxes. And the intention here is at least we'll save at least $400 to $500 per person by going through this information today, inshallah. Everybody wants to save taxes? Yes, okay. So the best thing happened to seniors is it's a temporary provision. It's not a permanent provision. Anybody who is 65 plus, they will be getting an additional $6,000 deduction in addition to the standard deduction they have, in addition to all the deductions they have. So there are two things. The other thing is if somebody is getting standard deduction or itemized deduction. Okay? If standard deduction, then you will be getting additional $6,000. That's what we have for the seniors. And again, there is this limitation, phase out, if you have $150,000 of taxable income for married filing jointly, and $75,000 if they are single.
So if they are filing jointly, one of them 65 would qualify the COP, or both of them have to be above 65?
Both of them have to be 65 to be able to claim the benefits. Tip income and overtime pay, this is mainly for a lot of service industry people in restaurants and hotels. They can definitely get a benefit of $25,000. So $25,000 is non-deductible. Basically, it's exempt. Oh, it's actually creates deduction. Sorry. And again, these are all temporary provisions. If you see here, the effective date 2025 to 2028. So basically, these provisions are only for 3 years till Trump is in government. Okay. Any questions here? Alternative minimum tax. Is anyone aware of alternative minimum tax? Anyone who pays high amount, $500,000 plus, who has income of 500K plus, will be aware of AMT. Generally, the government makes sure that people don't use the tax loopholes and pay zero taxes. So that's why AMT is there. So AMT is what it does is either of the tax due, income tax due, or alternative minimum tax. Whichever is higher is the tax liability of the individual. Okay, so that is alternative minimum tax. State and local taxes. I'm sure everybody has seen this in the news. State and local taxes has the cap has increased to $40,000 for married filing jointly, and it's only for up to 2030. So up to 2029 actually. So in 2030 you'll be going back to $10,000. So again, it's a temporary provision. It's not permanent. So currently, you are able to deduct up to $10,000 of state taxes, property taxes, like what you pay for your property, if you are claiming itemized deductions.
Itemized federal or itemized state?
Federal, itemized deductions.
From the federal.
So standard deduction, this is not there. But if you're taking itemized deduction, especially who are homeowners, I would say, they would claim this SALT deduction, property and payroll taxes. And the other thing is, this $40,000 is only for 3-4 years. It's not going to be there forever. And this is helpful mainly for high net worth individuals who have, I would say, 3 to 4 real estate properties or multifamily apartments. I'm sure there are certain people in Folsom who own a lot of assets, and you can claim, kind of, there is a tax planning behind this, there is a strategy behind it, how you can claim multiple $40,000 for different properties. Even though you're paying taxes for every property under your name, there is a strategy behind this. You can create certain kind of trusts to claim $40,000 for each of the income generating assets. So again, these are all loopholes that are there in the tax law. You just need to plan and strategize how you want to claim this. Anybody who has passed through question?
Yes, so if you're using it, like for example, TurboTax, and you answer the questions, does it automatically take care of some of these things, or you have to specifically specify something?
You have to specify, you have to plan ahead and do it, because IRS sees why you have this trust. If you have created this trust only to get this deduction, they will not allow it. So there should be an intent.
Trust like the
Yeah.
other.
He's talking about the SALT. TurboTax will ask you numbers.
Yes, yes, obviously, based on what you have done, whether you have taken standard deduction or itemized deduction. TurboTax, I think it does check later on, not right upfront, later on, whether standard deduction or itemized deduction, which one you want to take. It suggests later on, not like upfront. So you have to give all the information, then it will give you the details. But what accountants like CPAs and ES do is we do some modeling based on the information of the client to determine which one is good based on the situation of the client, whether the standard is good or itemized is good. Because, yeah, go ahead. That's okay, go ahead.
So if my property tax is 10 grand SALT and my standard deduction is 30, I would only have that I would still get a standard 30 deduction because
Yes.
I wouldn't go over that.
Right.
Now if I was itemizing and if I had so many deductions and everything and I go past the 30,000,
It's worth it.
now that all of this additional 10K for property, and then it starts to stack up, and now
Right.
I can really reduce a lot of income.
Definitely.
So the goal is to be itemized, not standard.
The goal is itemized, but again, not everybody owns a lot of properties. Not everybody has that many of deductions, itemized deductions. Yeah, because
If we don't have property like a normal person, is there any type of deduction that
Yes.
past the 30K?
Well, not possible right now, given that a lot of people have insurances. Earlier, before 2010, a lot of people didn't have insurance, so they would pay a lot of money in medical expenses, and the other item is contributions. Those are the things that would allow you to get more than standard deduction. And standard deduction earlier, before tax reform happened in 2017, 2018, was lower compared to now. So it's very difficult unless until you have property, you have taxes, you have contributions, you have other expenses.
I think I'm missing something. SALT has a cap, but mortgage and other stuff can still deduct it.
Yes, yes. Interest, mortgage interest, the insurance premium.
Expenses.
Yes. All those are deductible as itemized deductions, not in standard deduction.
The cap is on SALT. It was 10, now it is
40,000.
40,000.
Yes. Yes, sister.
Does this only apply to property taxes, state property taxes, or does it also apply to state income tax?
Everything, I would say, property, mainly it's property taxes. State taxes are already deductible in the federal. Yeah. So for me, what I have seen is for the clients, a lot of clients, what they do is they create different structures for different businesses to be able to get the benefit of the tax law. So it's important if you have different businesses to be able to create a structure in such a way that you're able to claim more deductions. And again, pass-throughs also can claim more reduction.
So all this you're mentioning is relevant only if you have business, right? For
Yeah.
typical W2 employer, how do these things?
Well, I don't know if somebody is owning $2 million property, your property tax could be more than $10,000
Right.
in California mainly.
But these are all provisions that are temporary, right? You cannot buy a property hoping that you get a tax benefit that lasts only 2-3 years, and then
Well,
it still has to make sense.
the thing is, this act came out in July, and the benefit is there for 3 years. And the intention here is to ensure that our community is aware of it, to be able to claim this benefit. And as a tax professional, what I can tell you is the tax law changes every 4 years for sure because of the government changes. In addition to that, sometimes it happens 2 years or once in a while when COVID happens, you get new tax laws and everything. So what is important is to be aware of that laws and be able to get the benefit out of it or use it to the extent it is helpful for you as an individual.
So how do you see the benefit? That is the benefit.
Right now, I mean, I think the salt tax was, deduction was up to $10,000. Now, if I'm paying property tax of $12,000, I can still get that $12,000 deduction. And at the end of the day, you need to model it out, whether it's itemized or standard. So standard is 31,000, whereas itemized, if my itemized deductions, if you add up everything, if it's more than 31,000, I would go and take itemized deduction, right, instead of taking a standard deduction. In that way, my taxable income will be lower. Yeah.
So is it reliable to kind of, whenever I do TurboTax, most of the time it's like go for standard. If you have, say, a couple of LLCs or whatnot, and then this has changed, would you still can suggest that go with TurboTax? Will it give the information that you are sharing here?
No, no, TurboTax will not give. Like I said, I think one thing is you create a path for your goal, or you go and see in the mirror whatever you have done already, past. So whatever information that you give TurboTax is already done, past information. We call it reflection of yourself in the mirror, right? Whereas if you plan ahead, think and use these tax regulations to reduce your income, that will help you in paying less taxes, and that is more money in your pocket.
I want to add one point about services we get from TurboTax and we get what from CPA. So most of the generic conditions are covered in TurboTax.
Yes.
Like a flow chart, yes, no, yes, no, yes, no. It would fall in that category. So 75 percentile will be covered in TurboTax. But if you have any specific situation, like if you are in a condition, it will create a trust, you may get more benefit, then TurboTax may not solve your problem. Then you will have to go talk to any CPA or expert about it. So 75 to 80% problem, general things are covered, but 20% which is very complex, you
Right.
have to talk to someone personally.
So TurboTax obviously is a very popular software, but again, people underlying under TurboTax are all CPAs and enroll agents, mostly enroll agents, very less CPAs in Intuit TurboTax. They always reach out to enroll agents, and enroll agents work for Intuit. So people who are behind the scenes of Intuit are actually enroll agents only. Any other questions? Okay. Yes.
Can you explain what you mean by pass-through?
Pass-through is a partnership, LLC. So pass-through partnerships don't pay taxes. It flows through that partnership to the individual who owns or the partners who own it. Charitable contributions. This is the biggest change that happened in OBBBA, I would say, impacting each and every aspect of US businesses, individuals, everybody. So what happened in the previous years was charitable contributions deductions were there for businesses up to 10%, and then for individuals for certain amount, whatever you do, only if you do itemized deductions. If you do standard deduction, there was no deduction for charitable contributions. Okay, so right now with this new law, 0.5% of AGI is non-deductible for itemized deductions. People who are claiming itemized deductions, let's say if you have an income of $300,000 and you end up $10,000 of contributions, you had done donations to charitable organizations. Out of the $10,000, 0.5% of 300,000 is $1,500. That is non-deductible. So donations, if are given $10,000 plus, remember 0.5% of your income will be non-deductible if you are claiming itemized deductions. So it's important to understand this. The other thing is maximum you can get a deduction of contributions is up to 60% of your AGI, the adjusted gross income. How you there are some certain laws how you can claim more deductions. There are options where if you have donor advised funds or charitable trusts, you can basically put some appreciated assets in it or donations in it, money in it. You get complete deduction of that money in your tax return. And you can give that money as charity whenever you want.
Did I hear you right? You said you can transfer your gross distribution, a 401k distribution, into donor advised funds?
I would say IRA, it's not 401k, IRA, individual retirement accounts. 401k is pre-tax, whereas you have to have a individual retirement account where it is post-tax.
No, Roth? Okay.
Roth IRA or
This is a pre-tax.
Yeah.
I'm talking about a 401k. So when I withdraw, I can directly transfer into what they call a DAF or donor advised fund. I thought that was not possible.
You have to pay taxes first on 401k.
Directly contribute to a charity, 401c, and there will be no tax on it. But I cannot put it in a donor advised fund as far as I know.
So I am not a financial planner. I'm looking only to tax point of view, and I'm trying to tell you only about tax regulations. So financial planning, again, as a tax professional, a lot of people think that we can also talk about financial planning. We are not financial planners. We are only talking about tax regulations. And again, I'm not aware of a lot of things like that into retirement accounts, how you claim distributions and all. But there are laws and regulations which, again, I can talk to you about it. But definitely, these are the options, and I can talk to you more, explain more about this in other slides. But people who are claiming standard, how many of you have claimed standard deduction? Awesome. So next year onwards, you will get a benefit of at least $2,000 if you're married filing jointly. So you can claim $31,000 plus as standard deduction and up to $2,000 of contributions as deduction if you have a standard deduction. So you can actually donate the $2,000 to MCF or FEA. Okay. Yes.
If I understand correctly, if I give the 2,000 in this year or past years, and I've been claiming standard deduction, that 2,000 hasn't really gotten me anything.
That's right.
I've just gotten the 30,000 deduction.
You only got ajr for giving the donation. That's all.
Right. If I was itemizing, different story, I'd be able to deduct that fully, no problem. But
Yes.
now you're saying that up to 2,000 of a certain limit on top of the
Standard deduction.
we'll
Yes.
be able to write off.
Starting January 1, 2026.
26, nothing this year.
Yes. That means you can start donating next year.
So, question on the donor advisor fund.
Yes.
So, if you claim standard deduction, you still can put money in the donor advisor fund and still deduct 100%, right?
Yes. 100% of it.
Okay. Do you have a limit on the earnings?
60% of AGI, basically.
Or 60% of AGI?
Yeah. And again, I'll talk more further in the slides. Okay.
Did I hear it right? Did you say that you can
Can you repeat the questions?
Oh, okay. Sorry. Okay.
the question, then I'll ask the question.
Yes. I think the question was if you are claiming standard deduction in 2024, 2025, and if you have done donations, whatever donations you have done to different charity organizations, you will not be able to claim the benefit of it on your tax return.
That's correct.
Right? If you're claiming standard deduction.
Then he added something.
Yes.
Donor advised fund.
Yes.
You cannot claim it if you're not itemizing.
Of course. That's true. Yeah.
I got confused, but
Yes. So if you're itemizing it, anything, then if you donate to donor advised fund, if you're contributing to DAF, donor advised funds, then you can claim that as 100% deduction if you have itemized deductions. Yeah.
And just to clarify, the reason is for that because when you donate into a DAP, you're donating a large amount of money usually or something, so it's going to go past the 30 standard anyway. So it puts you in the itemized.
Oh, okay, okay, right, so because you need to be at 60% of the AGI.
Yeah, yeah,
And then that 100% of that donation now is only like 60%. You can get a 2% off for it. So if you want to use that strategy
So-
going forward, use that.
Yeah, I think I will explain to you further in other slides. Going ahead, home mortgage interest. So it was limited to interest on 750,000. Now it was temporary up to 2025. Now it made permanent with this OBBBA, and also it treats some mortgage insurance premiums as qualified interest starting 2026. This is for people who put only 5% down payment and then you have insurance premiums. You can also claim that benefit starting 2026. Car loan interest. Obviously, I'm not suggesting to go with interest. All I'm saying is explaining to you about the law here. Car loan interest is basically you can claim up to $10,000 deduction. Again, this is a benefit for a lot of individual families who don't have a car, who are looking to buy a car. You can claim $10,000 interest deduction in addition to the standard deduction. If you're
Starting this year,
2026.
next year.
Yeah. Oh, it's. I have to check exactly the dates. I cannot remember everything, but definitely I can look it up exact dates and let you know.
If you take out a home equity loan to buy a car, can you deduct that?
I'm not sure.
It's a double.
Good question.
Double taxation.
For everything, it depends actually. For everything, it depends, and we can definitely talk more. Yes.
So does the car needs to be manufactured in US?
Assembled in US.
Assembled?
Yes.
So you are buying US car.
Basically, yes. Trump accounts, people who have kids in 2025 and up to 2028, if you want to have more kids, you can get $1,000 from Trump, inshallah. But this is like a retirement account. Basically, it's a IRA account for your kids, and you can start using funds after the beneficiary turns 18 for your kids. Yes. I don't have any idea. I haven't seen that question or any law talking about it. But basically, you get a benefit, like child tax credit is one. It has gone up to $2,200. Yeah. And again, this been made permanent. Any questions here? But reach out to your employers. Yes, brother.
Any provisions on stocks, or are you maybe talking about?
So yeah, because we have a lot of things in law. So I can tell you, I'm from India. In India, we have an income tax book which is this big. I know some brothers know about it. In US, you have 10 books like that. So taxes is very complex in US. Everything there is a tax. I was trying to show you the video, it didn't come up. But basically, there are a lot of taxes, and I'm not familiar with some of the taxes myself, even though I'm a tax professional. And in India, basically, people think as a chartered accountant, you should know everything, but not everyone knows everything. Taxes are in US specifically complex. And I'm going to see if we can have another session, inshallah, with the help of the board members, and plan another session sometime in November or December. This is the tax planning bracket. Some of the brothers were asking about this. So I wanted to just make sure that I put it here for your information. This is available in Google as well. I didn't print it out. Everything is available online.
So it's just about tax planning, right?
It's guide tax planning. Basically, these are the brackets and thresholds for different things. How many of you like coffee or tea? Coffee versus tea. Coffee?
Are you buying?
No. Tea? Okay. Okay. How many of you like your home tea compared to your outside tea from Comeria or other coffee shops? Home tea. Okay. I think ladies like home tea. So I guess most of you like outside tea or coffee. Okay. So one thing I realized is my wife makes wonderful tea. Some of the brothers know about it. and I don't drink tea. It's not my habit. But she made a point on a weekend, every weekend, to make tea, and we sit together and eat some cookies like Good Day or Osmania biscuit from Hyderabad. And that is the time you discuss a lot of things, talk about different things. So I would highly encourage each of you to spend time with your wife's spouses, drink tea or coffee, whatever it is, to talk about your taxes. And also, you can also drink tea and coffee outside in the shops with your friends. And you can also invite me.
I thought it was tax planning. You were giving a marriage advice.
Charitable giving. So this is the change that I was going to talk about. Starting in 2026, charitable deductions will face 0.5% AGI and an overall itemized deduction cap. So basically, if you are paying $10,000 donations, then 0.5% of your AGI, whatever it is, will not be deductible.
Would you repeat that again, please?
So if your, let's say, if your salary is $300,000, if your AGI is $300,000, and if you have given donation of $10,000 to MCF, 0.5% of $300,000 is $1,500. So $1,500 is non-deductible from $10,000, especially when you have itemized deductions.
So this is something new?
Yes. So starting next year, a lot of people will not be able to claim the entire amount as deduction. And TurboTax will do it automatically, but you will not be able to understand things. That's why I want to make sure that you are aware of this.
So 0.5 can get carried over or it's gone?
Yes, it can be carried forward.
Can be carried.
Yes. Yes.
So they're taking a nickel out of every dollar we donate?
The thing is, if you understand, whoever is claiming standard deduction, they will be getting $2,000 deduction. So it's a set off against that.
Wow. Okay.
So is this to encourage people to go for the standard deduction?
No, 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 no. It's encouraging people to go for other ways to claim deductions, which high net worth individuals do. Not everybody does. And that's what I'm going to talk further so that you can claim more deductions. And there's a limitation about cash and property as well. So 60% of AGI, up to 60% of AGI, you can contribute cash. And 30% of AGI, you can contribute assets, appreciated assets like property or some kind of stock. So this is the planning consideration that's happening right now for a lot of high net worth individuals in the market. So what they're doing is, because you cannot claim more deduction in 2026, if you can create a fund, donor advised fund, with Fidelity or Schwab, Charles Schwab, whatever it is, whatever your company has brokerage, try to create a fund. Just imagine you have a fund where you have contributed money, and you can decide whenever you want to give that money as a charity to anyone, any 501c3 organization, anytime, whether you want to do it 2025 or whether you want to do it in 2028, it's up to you. And the money you contribute in these funds will grow. It's not going to sit just like that. So if you have some extra money, I would highly recommend you to think about these funds. And there are other options also, like creating a trust, charitable trust. Again, there are different regulations. And the compliance and paperwork is handled by your brokerage if you have a DAF. And you have a lot of benefit from a tax point of view. You can claim the entire amount as a deduction in this year itself if you contribute money to that account.
So this is a pre-tax account. Pre-tax contribution to this account.
I have looked into the pre-tax or post-tax, but I have seen that it has completely whatever amount you contribute to the DAF, you can claim as deduction.
This is deduction.
Yes.
So this
So when I donate out of this account, do I need to pay taxes if it's a pre-tax?
No.
no,
No.
Is it pre-tax or not?
no, you don't pay tax on it.
No,
But-
is it pre-tax when I do?
No, no.
I would say, the thing is, whatever you donate to DAF, it's post-tax. Given the account itself is already created in a way, nothing is taxed in that account. Everything goes tax-free in that account.
Paying into it with the pre-tax dollars.
Yes, that's what I'm talking about.
Confusing. And then you're deducting it from your tax, from
So
your
you donate to it for
gross income.
pre-tax money.
I have to check into it. I have to look into the specific regulation and see if it's pre-tax or post-tax.
Then which thing is post-tax?
No,
Pre-tax is basically, it's like a 401k. Yeah, that's what I have to check into this, whether it's pre-tax or post-tax, but I have focused on mainly creating this account and contributing money in it. Whether it's pre-tax or post-tax, whether it works through your employer or not, I am not sure about it.
No, no, that's all.
So, brothers, I think the point here is, with pre-tax or post-tax, we can definitely take a look into it. But the point here is, getting a deduction is important. Whether you can do it in 2025, go ahead and do it. Let's say if somebody has $25,000 sitting in your account, and I know 2.5% of your savings is zakat. Everybody does zakat. Everybody does charity in 2025, 2026, 2027, inshallah, if we are alive. So the goal here is, instead of claiming the deduction next year, if you have the opportunity, claim the deduction this year by creating that account. Okay, and again, DAF is one option, charitable retirement trust is another option, and people who are 70 and a half plus, who are retiring, who have like an individual retirement account, they can donate up to $108,000 directly to the charitable organization.
So I have, let us say I have a $60,000 in this account, and the $60,000 grew to be $120,000, and I want to donate $20,000.
Yes.
Do I need to pay taxes?
No taxes. Everything is tax-free. It grows tax-free. You can,
Similar to Roth.
you can even after our death, this money is there. Your beneficiaries can easily, you can plan accordingly, and then this charity will go on forever. And imagine this charity being there forever under your name. The charity is being given every year to schools, to hospitals where people need it.
The control he has is where the money goes.
Yes,
But he doesn't have any other control, meaning,
where it is invested.
yes, meaning that if you want the money back, you're not going to get it back.
Yeah.
Okay, so the only control
Yes.
you have
Okay.
is give this amount to this man.
So one-way transfer.
Any questions? Or move ahead?
One-way
Yes.
transfer. You donate, you cannot get it back.
Yes.
You said DAF, what is DAF?
Donor advised fund.
Excuse me. Now, that donation fund, who could use it?
You have to decide to which charitable organization you can.
Can you take
No,
it
no,
back?
no. You cannot take it back.
That's the point.
Yes.
It means if you take it back,
You cannot take it back.
taxes it.
You cannot take it back. You cannot take it back, first of all. Once you give it to the fund will invest and grow that money and ensure that money is there for charitable purposes. Whenever you say this $120,000 has to be donated to MCF, it will go directly to MCF.
But it's not like,
There's no tax. But then the thing is,
not
what is,
like college fund.
No, no, no.
College fund, you could get it back.
Yes. So the benefit here is you're getting a deduction, entire amount as reduction, for itemized reductions again. Yeah.
So, and it is only going to 501c3. You cannot use that
Yes.
money to pay
Education. No. No.
to, yeah, whoever, right?
Only charitable organizations. Yes. And the other one is qualified charitable distributions. Basically, if you have an individual retirement account, 70 and a half plus, you can definitely again contribute up to $108,000 directly to charities. So donor advised funds, basically you have a lot of tax benefits here, immediate tax reduction, tax-free growth of the money that you have put in this fund, flexibility in giving this money wherever you want, whichever charity you want, bundling the contributions, administrative simplicity in the sense you don't have to worry about the tax work, paperwork, whatever it is for these funds. So imagine that you have stock of Intel, you can just put this in this fund and they will sell that stock and put the money and invest in something else. That money will grow. It will grow up whenever you want to, you can give that money as charity.
And you will not pay tax on the gain.
Yes, sir. That's right.
That's the point.
Yes.
You claim only once.
Yes, you can claim deduction only once, and because starting next year, your donations will be cut 0.5% of your AGI. This is an opportunity to claim deduction one time. To the extent you have funds, go ahead and try to look into DAF and trusts.
But even the DAF also costs some money.
Very, very, very less. Well, yes.
Is there any limitation on donating from that account to any specific charitable?
No, no, there's no limitation, but how much you can get a deduction is up to 60% of your AGI is what is the deduction that you can claim max every year.
Like if I deposited money in that account, I got deduction, and next year if I want to donate to some organization which qualifies.
No, you cannot get a deduction for that.
No, I'm not going. I'm talking about deduction. I'm talking about disbursement.
Yes.
So can we call, okay, next year if we are paying to somebody
Yes.
as zakat,
Yes.
so we will pay from that account.
Right.
Counted as zakat in our religious account.
Yes.
So we can donate to
Any charity, any 501c3 organization in US. Okay. So having said that, any questions on charitable donations?
So those organizations should be qualified by only by the 501(c)(3).
Yeah, but, I mean basically these are non-profits.
You can write a check
Yes.
from that
No, no, they're not adding it.
The DAF, they should be able to directly send the money. You just need to tell them where to send.
So can you donate from the 401k to
401k is pre-tax. So basically, whenever you take money from 401k, it is taxed. And penalties are also applicable if you are not up to 59 and a half years. And then there are certain rules about distributions and all. So that's why always I recommend everybody should have a separate individual retirement account, which is like a Roth IRA, which is post-tax. Having said about contributions, we'll further discuss different things. There are a lot of regulations, again, about retirement accounts. I cannot talk about everything in one session, and inshallah we'll have another session for sure about talking about different things, and I'm going to explain about the other topics that I'm going to talk about in the next session. The Grow MCF banquet is happening next Saturday, so please ensure that if you haven't got a ticket, please get a ticket. I still have one extra ticket. If you want, you can definitely reach out. Estate and gift tax. So basically, the estate tax, the lifetime exemption has gone up from $14 million to $15 million. Anybody has businesses? Sorry.
Per family or per individual?
$30 million for family.
Wasn't it higher before?
$15 million, 14 was there. 14 was there.
But this one doesn't have a sunset clause, right?
It's permanently, it's permanent.
Sunset clause, yeah, that is correct.
So that limit is on total market value assets,
Right.
right? Not like cost or anything.
No. Total fair market value.
Because there are some people who have like buildings. or
Yes,
whatever,
yes.
They can get to that 15 or 30
Yeah.
pretty quick.
So there is tax.
Or even a business valuation when they have a good business that values, high numbers. All of that, your house that you have, anything of value, your broker account, all of that market value at that time when you pass away, you better hope it's less than 30 million.
That's why it's important that you kind of plan ahead with respect to creating trusts, making sure that your assets are under certain trusts for your different beneficiaries, kids, spouse, or charity, and plan accordingly. Okay, it's very important. Otherwise, you end up paying taxes on something which you can easily say 40% of $5 million is a big number.
You state your gifts. Would you also talk about how much gift one can give to anyone without the receiving party getting taxed?
The receiving party will not get taxed as long as it's a gift,
Is below?
as long as it's a gift.
No, it's a gift, but below certain amount.
So receiving wise, you have $19,000 as exempt. 19,000 in 2025. Yeah, after 19,000,
Per couple giving $19,000 to anyone.
yes. Anybody, they want to discuss about business taxes, business tax provisions? Yes? Okay. I know Brother Saif is there. So in US, a lot of companies pay, I don't know how many number of companies are there, but the share of taxes they pay is less than the share of taxes individuals pay to the US government. So imagine how much you can save if you have a business. Okay? And you can do startups also. Obviously everybody is a tech guy here, or tech people here. So inshallah, start businesses, more companies. So the biggest benefit is the bonus depreciation. So the bonus depreciation, the history behind it is when 2001 happened, bonus depreciation was created for companies to claim more expenses in their books of accounts. So basically, any asset that you purchase for the company, you get 100% bonus depreciation starting from January 20, 2025, after Trump became president. So basically, any asset that you purchase for the business, you can depreciate 100% of it. The biggest change that happened with OBBBA is the real property. It never was 100% depreciated. In the history of US, a business building was never depreciated 100%. This is the first time in the history of US that a real property that is being used for manufacturing purpose is able to claim 100% deduction of that expense of that building.
Within how many years? 1, 2, 3?
Same year. If you purchased a building of Woodmere for your business, okay, 100% of it can be claimed as deduction.
Within 1 year.
Same year, yes.
Same year.
Same year.
But I can also spread it if I choose to.
It's up to you, yes, of course.
Okay.
But there is a benefit for you, right? And just because of this, a lot of brothers are starting manufacturing in US, out there in the market.
That law has been there since 18.
100% manufacturing deduction.
Yeah.
There's
18, I believe.
There's advanced manufacturing credit available from 2022 onwards, but 100% of the building that you use for manufacturing was never there. Yeah.
This is a building.
You can depreciate the building for 27.5 years or 29 years, but not for 1 year.
And equipment, both can be deducted.
Equipment, yes. So basically, if you plan well for your business and discuss and talk to your advisors, plan ahead if at all you're going for the building. A lot of people are going into manufacturing right now in US, and big companies are investing billions. Small firms, small companies are investing millions. So inshallah, we can have more manufacturing plants in Folsom.
So when you say manufacturing, it has to be physical, or can it be a software company, for example, that
Manufacturing.
manufacture but it writes software?
Manufacturing is physical
Physical
product.
Okay.
Yeah. And there are certain exceptions, especially for food industry, where food itself you cannot manufacture it. So there are certain exceptions to this rule. But otherwise, a manufacturing plant, it creates jobs and everything. So the government is business friendly, giving 100% reduction for it. Small business expensing, section 179. So before getting bonus depreciation, you can actually claim 179 expense. So basically, if you have assets up to $4 million, then $2.5 million. Up to $2.5 million, you can claim as a expense in your tax return for businesses. Again, these benefits will not be available for individuals. You cannot buy a house and claim that as expense. But if you have a business,
Has to be commercial building?
commercial building, I mean, 100% manufacturing. And then 179 expense is available only for property which is less than 20 years of life of the asset. So basically, if buildings are there, their life is beyond 20 years, you cannot claim it as an expense.
So you bought like a property here in Folsom somewhere, and then in December, can you claim it next year instead of?
No.
No.
2025. So 2025, you're buying a property in December, commercial building, it can be depreciated for 27 years. Only if you have taken that building for manufacturing of its product, then you can claim 100% of it as depreciation. 100% of it. If you are manufacturing something in that building. Yes.
So it's only for manufacturing, it doesn't work for real estate?
No. For real estate, who a lot of people do in US, you can do cost segregation analysis. Basically, you can break out your buildings into windows, furniture, electrical equipment, HVAC equipment, and then claim more depreciation compared to the building itself.
What about the rental property?
You can claim depreciation.
But not all of it in 1 year.
That's not manufacturing. So,
Okay, that's what I wanted to
yes.
So I have a question.
Yes.
Say you have a company or you open a company later in the year and you had a like car or whatever early in the year, right? Same year. So 2025 you bought a car in January. In July you opened a business or open a tech or whatever. Can you get any benefit of buying that car or
Yeah, the business.
car into the business
Yeah, the business has to buy the car.
Business has to buy the car.
Yeah,
The business is
you will get money, so you will get taxed, but the business itself will get deduction.
You can deduct mileage also.
Yes,
So it is a different entity.
that's a good question. But yeah, I think for any specific questions we can talk further later. We are short of time, so want to further go ahead and discuss. R&D expenses is a big item. In 2022, R&D was expenses were not deductible for a lot of companies. So if you remember, in the last 3 years, there were a lot of layoffs that happened in technology sector, and one of the reasons is this big R&D expense not being available as a deduction for the companies. All the tech companies were claiming lots of millions of dollars as R&D, and suddenly that is non-deductible. So you have to capitalize and amortize over a period of 5 years. So that's the reason why there were a lot of layoffs. We think that's one of the factors, not all the factors, but one of the factors. And currently with this OBBBA, you are able to claim the whole R&D expense as a deduction. And some of the companies, especially small and medium-sized companies, they can go back and claim, again, whatever was capitalized, they can claim it as deduction in prior years.
Or you can go back prior years.
Only for small and medium-sized companies up to $31 million of gross revenue, average gross receipts. Yeah.
How many years you can go back?
2 years, 2022, up in 3 years now. Deduction for business interest, it has the formula has been updated to add depreciation and amortization. I don't think this is I mean, I don't know whether everybody wants to be aware of this from this side, but you can move ahead. Charitable contribution for companies also, if you see here, 10% is deductible up to for companies earlier, but now only beyond 1% and less than 10%. So 9% is what is being deductible for companies. And the 305,000 limitation has been made permanent for individuals for losses. Yes, we are.
On the previous slide, you had QBI. Is it staying?
Yes, it's still there. It's actually made permanent. 20% of your qualified business income you can claim as a deduction.
You have expiring 12/31. Oh, that was the prior one.
Yeah, that was there. As per tax reform, it was expiring in 2025. So basically, tax reform gave a lot of benefits to a lot of businesses and individuals, so that after he was in 2025, it will be coming back. Almost $4.5 trillion cost, right? So now with OBBBA, the $4.5 trillion cost is going for a period of 10 years. So the impact will happen after 10 years, not now.
That one is huge. I think it should be at the top.
Yeah, this is very good for a lot of individuals. The other important aspect, it's not in the slide, is definitely meals and entertainment. A lot of companies, especially technology companies, are giving meals for free for employees in their companies. Starting 2026, that benefit is non-deductible for companies. So you can see change from employers sometimes. I don't know whether they will change or not, whether they'll start getting money from employees for the meals they provide in the cafeteria.
For charitable contributions, generally it's better to do it as individual or depending on the business income level.
So for individuals, we suggest having a certain kind of fund, which is what I suggest to DAF, Donor Advised Fund. And businesses, for them, it's a different thing right now. They just pay cash. They don't create any separate fund for that.
So you said entertainment is not deductible.
Yes.
But the travel expenses, all that is still deductible.
Meals is not deductible, yes. So qualified opportunity zones, investments. Anybody interested in opportunity zones? Okay. So yeah, this was again expiring in 2025. Now it came back with the OBBBA. It modifies the program, designates new zones starting from 2027. So again, 10-year rolling basis. So we can again discuss privately if you're interested in talking about it. Exclusion for small business stock. A lot of startups, they sell their businesses, right? So they get huge money whenever their business is acquired. So that is up to $15 million is excluded from tax when you are owning the stock and you sell that company to a big company. Up to $15 million is tax free.
First 15 million tax free.
Advanced manufacturing investment credit, again, these are credits available for big companies. Here, I would like to focus on 1099K reporting. I know a lot of people have asked me before whether it's $600 is the threshold. This is actually now increased to, I think it's around $20,000. $20,000 and 200 transactions per calendar year. So only once you have this kind of transactions and $20,000 threshold, then only you have to release 1099K. These are all impacting businesses. Energy provisions. I'm sure you're all aware the EV vehicles credit has gone away. Now the houses where you have solar batteries or HVACs where you can change the gas heater to an electric heater or insulation, whatever you do, you can get the benefit of it till December 31st. The questions were raised, a lot of questions were raised. If you enter into an agreement and then install it next year, was it deductible? Well, no. You cannot claim credit if it's not installed by December 31st.
If it's not installed, what?
The clean energy credit. Basically, you can get the credit if you have like a solar battery at home or solar panels or electric heaters instead of gas heaters. Yeah.
Is it by payment or by installation?
Installation. So basically, these are the year-end planning ideas for individuals. Understand whether you want to take standard deduction or itemized deduction. Understand how you want to claim the SALT cap of $40,000. Make sure that you plan accordingly for your charitable donations. Estate and gift taxes, basically, again, everything is all planning that you have to discuss and plan ahead before you actually claim these benefits.
Brother Hasan, is the presentation be made available?
This one, this was no.
No?
Can you go back to the previous
Okay, okay.
one with the, yeah, this one.
So this is for businesses and individuals. Things to watch for in 2026, definitely charitable contributions is a big item, I would say, for individuals and businesses too. Capital investments and manufacturing. You can claim 100% bonus depreciation, 100% depreciation for your building if it's manufacturing plant. And these are the topics that I thought will be boring but beneficial topics. BBBBA, BBBT.
One thing I don't see in here is, I think would be beneficial for our community is trust. Like you're creating a trust for your properties, your primary home, your...
That's a very good thing. And I'm not a trust advisor. There is a different trust advisor, trust people who do it. There's a legal team behind it, I think. And we have Sharia Viz, I believe. It's an online thing. But definitely there are a lot of legal professionals out there in the market who are willing to talk to the community.
Can you elaborate on the second bullet?
Roth conversions. Basically, if you want your money to grow tax-free, where you can withdraw the money after a certain age tax-free, you can convert your 401k to Roth conversions, Roth IRA. And this
Plan so that you can avoid
penalties.
some of the taxes.
Yes, of course. It's all about planning, and it all depends on your situation, customizable situation. Every individual is different. Every situation, every family is different. Depending, you have to plan what is your income or how much you're getting taxed now or later, and then discuss whether it's worth it to do the conversion now or later on, and how you want to get the distribution from the Roth IRAs. How much you have to distribute on an annual basis so that you can plan and get the benefit out of it. So maximum you can contribute $7,000 to the Roth IRA per annum. But then imagine this, from 401k, when you withdraw funds, it's right now it's penalty, but then after a certain age, even then it's taxed. So whereas Roth IRA, it's not taxed, it's tax-free, it grows tax-free. So even if you contribute $7,000 now, it's going to grow tax-free, compounding year on year, and inshallah, it'll be a bigger number when you are ready to get the distribution from it, and it's going to be tax-free when you get the distribution from it.
So if you do $100,000 IRA to Roth conversion, do they withhold from the IRA, or you pay the taxes from your savings?
With respect to your IRA, I was looking at 401k. If you're looking at 401k, basically you have to plan whether you have to plan at what age you want to get the benefit out of it.
Now I have IRA.
Okay.
And I'm converting it to Roth.
Roth, yes.
Let us assume it's $100,000.
Okay.
So that the total $100,000 go to Roth, and I pay the
Taxes
from a
upfront.
different account, or they withhold the taxes from the $100,000.
They withhold taxes.
Huh?
Withhold taxes. Even if they don't withhold taxes, you can claim the money completely and pay the taxes within. If you convert that into Roth, you don't have to pay taxes within 60 days. In 60 days.
You convert it to Roth.
Yes.
You don't have to pay taxes.
Right. If you do it in within 60 days.
But the taxes, where the from the conversion date. So where do the taxes come from? Is it from withhold from the 100,000?
IRA. So within the IRA itself, it's already taxed because you already in 401k to when you convert into IRA, it's already taxed. So whereas if you convert it into Roth IRA, you don't have to pay any taxes on it.
No, say that again.
If you have an individual retirement account, basically from 401k you transfer the funds to IRA, from 401k to IRA, and that's where
That's not taxed.
that will be taxed if at all you are moving the money to an individual retirement account.
This is after tax. This is only work for after tax contribution.
No, if you move
After-
your money from IRA if you move your money from
So
401k to
what we can do is we can definitely take a look into your private question. Privately we can discuss about it, and then probably I can explain to you more in the next session, inshallah, about this. About retirement accounts, Roth conversions. Any specific one question? Any specific items that you want to discuss further, other than these topics?
Do you provide paid consultation?
Yes.
That's why he's here.
We need to have that slide.
Inshallah.
What is it?
So I work for PP & Co. I'm a senior tax manager over there, and prior to this, I was at different firms, also at a couple of multinational companies in Silicon Valley, and I'm happy to help the community to the extent I can.
Can you quickly just,
Sorry. Yes.
somebody's asking, will the RMD require minimum distribution, right? Dropping just,
We can discuss that as part of Roth conversions. Yeah. Yes, brother.
On the school fee deduction, it's only for the pre-K, right? Not for your regular, if you're sending kids to a T and
That's we can discuss further in the next session, inshallah. You said crypto, right? Yeah, no, first session on crypto, inshallah.
yeah, digital currencies.
Okay.
So we have pizza ready.
Okay.
If you want to go further, or
No, that's all. I think that's all we have. Any questions and answers? I know the brother said want to talk about conversions.
Stocks, was there anything different, big beautiful bill compared to the old?
Nothing. Nothing changed. Yeah.
Short-term capital.
Yes. Sister. Yes. Yes, interest on the car. Right. I mean, the interest is on the price of the car, basically. Right, right. Yes. Cool. Thank you so much. Thank you so much. Exactly. Exactly. Sorry, Hasan.
Zia. Did you say you were going to share these slides or?
No.
You were not?
No.
Okay.
This is a lot of different slides information.
Okay.
Obviously, yeah.
All right. Okay. All right. Thanks.
Sorry. Sorry, my idea.
रॉथ कन्वर्जन की फ़ी होती है कि अब आपका आया रहे उसको कन्वर्ट करना है रॉथ में तो उसकी फ़ी होती है
देख के बोलता हूँ मेरे को क्योंकि वो फिडिलिटी को मालूम होता है हाँ मैंने किया नहीं मैं खुद से
अच्छा आपकी क्या आपका मतलब
मैं तो
कंसल्टिंग फ़ी आपकी कंसल्टिंग की फीस कितनी है
डिपेंड्स ऑन
क्वेश्चन
issue questions and issue right ऐसा sorry Hasan yes how are you
It was really informative. Alhamdulillah.
okay jazakallah